Welcome to our detailed walkthrough on understanding IRS Notice CP504 and what it means for you. IRS Notice CP504 is an official communication from the IRS indicating a notice of intent to seize, levy, your property or rights to property. This means that the IRS intends to levy your assets to satisfy unpaid tax obligations. This type of notice is sent by certified mail to ensure that you receive it and understand the seriousness of the situation. Ignoring a CP504 notice can have serious consequences. If you don't respond to the notice in a timely manner, the IRS can move to seize your assets, including bank accounts, wages, and other property. Unpaid balances can quickly escalate due to interest and penalties, so it is important to respond promptly to avoid further complications. Receiving this type of notice means you have significant unpaid balances, and the IRS is taking steps to collect the balance. It's a clear indication that you must act immediately to resolve your tax problems. Understanding the tax codes and your tax obligations is essential to effectively navigate this situation. Notice CP504 is not just another reminder, it is a final warning from the IRS. It means that the IRS is ready to begin levying your assets to collect unpaid taxes. Ignoring this notice can have serious consequences, such as levying your bank accounts and wages. As previously mentioned, if you don't respond to a CP504 notice, the IRS can levy your assets. This includes seizing funds from your bank accounts, garnishing your wages, and even taking other property you own. On top of levied assets, the IRS can file a federal tax lien, which can damage your credit and make it difficult to sell or refinance your property. A tax levy is one of the most serious enforcement actions the IRS can take, and it can have a significant impact on your financial situation. Another serious effect of ignoring a CP504 notice is the possibility of passport denial. The IRS can ask the State Department to deny or revoke your passport if you have a significant tax liability. Preventative actions are essential to avoid these drastic measures. It's key to respond to the notice immediately and take steps to resolve your tax liability. In some cases, you may receive an additional notice before the IRS takes enforcement action, but relying on this is risky. It's best to address the CP504 notice as soon as possible to avoid further complications. The notice serves as a clear indicator that you must respond quickly to prevent the IRS from taking further enforcement action. Understanding your rights and options, such as contacting the IRS or seeking help from a tax professional, can help you navigate this difficult situation. One of the most common methods the IRS uses to collect delinquent taxes is wage garnishment. This is when a portion of your paycheck is taken directly by the IRS to satisfy your tax liability. Wage garnishment can have a big impact on your financial stability, so it is important to address the issue right away. The IRS can levy your bank account balances and seize the funds available to cover your unpaid taxes. This can involve checking and savings accounts and any other accounts you hold funds in. Regular monitoring and communication with the IRS can help prevent an unexpected asset seizure. If you are in the real estate business, the IRS can levy your commissions from property sales. Likewise, any payments you receive from clients can be seized to cover your tax liability, affecting your business operations and cash flow. The IRS can also target your business assets, such as equipment, inventory, and other property used in your business. Losing business assets can affect how you generate income, so keeping track of your tax obligations is critical. Besides business assets, the IRS can also seize personal assets. These include vehicles, real estate, and valuable personal property. Protecting personal assets requires timely action and possibly working with a tax professional to find a solution. The IRS can also levy a portion of your Social Security benefits. Although certain limits apply, this can still greatly affect your monthly income. Understanding your rights and taking precautions can help protect your benefits. We hope this video has been helpful. Make sure to subscribe to our channel as we continue to delve deeper into important tax-related subjects. Make sure to check out Part 2 of our CP504 guide.